notice we do a lot of speculative plays like long calls, long put trades, and those will work out pretty well, putting up a small amount of capital. And those are fun, we do them all the time. But I wanted to talk a little more about placing spread trades. I think a lot of you may not understand quite what it is, but basically what we're doing is with these long calls and long put plays, we're walking into a casino and we're players. We're pro players, but we're players. And what we want to be the casino, because as they say, the house always wins. So what we're doing when we're selling these options, naked options, spreads, whatever they are, we're just using kind of a statistical analysis with Greeks combined with the tools we use to determine support and resistance levels, and then we'll optimize that. If we're, say, putting on an iron condor, we'll optimize it, figure out how far out to put the wings, and then see what's going to be more beneficial to have a tight wing, have a large wing based on whatever the margin requirement for that position is going to be. So what we're doing then is we are creating a situation for ourselves in which we are winning, 95% of the time. It's not as fun as trading, at first at least, as trading, putting a bunch into one position and trading a long call or a long put or whatever. But it is fun when you see that recurring income that you don't really have to pay attention to every week. We go in on a Monday or Tuesday and place a trade for that Friday, even if it's only like putting up $2,500 to make 300 or whatever it is, 200. It doesn't really matter. We're still making 10% that week or whatever it is. So we go into the week and we can put up $10,000 on one trade, not look at it for the most part all week unless it starts moving against us in one way or another. And make $1,000 a week consistently on basically doing nothing, on basically just risking the money that you have. And we're selling time, so time is working for us rather than against us. So that's why we like doing those spread trades and naked options trades, selling options versus buying them, like the trade we just did with Roku on earnings. Selling calls. Like, why would you sell calls? Why wouldn't you just buy puts? Because there's a lot of volatility priced into that with earnings coming up, and then there's the time left on the contract. So I'm taking advantage of that situation by taking advantage of the volatility priced into the contract and that time and selling them both preemptively. So that's what we like to call trading like a casino. So follow along with our trades if you're not already. If you did, you had a good month last month, you're going to have an even better month this month. So go subscribe if you haven't already and start following along and start